You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, yesterday, October 9th, we were expecting a WASD report. However, we did not receive one. So, what was that report going to show?
Well, it would have shown how USDA supply demand balance sheets for major crops would have been impacted by what the USDA National Ag Statistics Service would have found from their crop production survey. And that was again intended to they were gathering data to represent October 1st conditions. So that was part of what was intended to happen. The other part of that would have been that the WASDE supply demand balance sheets for these major crops were going to also reflect the results of the September 30th, end of September grain stocks and small grain annual summary numbers. So the kind of leaves us in the mode of trying to understand or estimate where these the results likely would have been. Now we're looking out to November 9th for the next WASDE report. Hopefully, any closures of the U.S. federal government, USDA in particular, will have been resolved by that time. We'll get we'll get more information for the market. It does up the ante and increase the potential for volatility, either to the upside or the downside around that November report. So we'll see. But as of right now, we're not completely in the dark as to where things are going. We do have have at least independent reports of grain export summaries. We have some idea of what's going on at ethanol plants. Uh, the We see what cash prices are, cash and futures prices, and we're getting independent harvest reports. So we're pulling all that together. So it just makes for it makes for a time when we don't have um, as much solid information going on in the market. However, if this was a time when we had very short crops, really tight supplies, it would be a much more volatile time than we're in seemingly this year, where crops look pretty good. It may vary some around what the final yields and production are, and really we're just quibbling about how high the record yields will be for corn and for soybeans and some of these crops. So we're pretty confident that we're in for a large supply situation where we'll have storage for a fair amount of grain that's not sold at harvest going forward, but we are as we are. Now, I guess in bringing all that together, probably the best information we've got right now would be what the trade anticipates as they pull together what independent information they have. What was expected for the report yesterday out of the average guess of average trade estimates were that the U.S. corn yield would drop from that September figure, September 12th report number of 186.7 bushels per acre for corn down to 185. So that would have impacted things that unless the USDA changed acres as they had in that September report, that would have dropped U.S. corn production from 16.8 billion bushels down to 16.65, about 16.645. So about 150 or so, 150 million bushels. That would have had some impact on the supply demand balance sheet. We'll see how that goes. On soybeans, the average yield drop would have was projected or thought to drop uh, from 53.5 bushels per acre down to 53.2, a moderate drop. And I would say there's still a fair amount of uncertainty with regard to where these yields are. It does not go unnoticed that in the eastern and central corn belt that we've had dry conditions for a while, and those worries about that aren't showing up in the market with regard to soybeans, which mature later at all. Really at all. We haven't seen the markets cash wise have make any strong moves to the high side. We're just holding in pretty steady till we get more information. So, and if that slight yield decrease occurred for wheat, we would have gone from about 4.3 billion bushels down to 4.27. So again, about 29, 30 million bushels, not a big thing. So we'll see. Again, the ante or the risk, the impact is raised for that November report because of what we have here. And expectations for ending stocks for the other, I guess the other major focus that these markets have. The For corn, the we did see an expectation of 2.23 billion bushels of stocks being worked out, and a lot of that has to do with issues that came out of that grain stocks report. Basically, the USDA went back in and had increased the size of the 2025 crop by their estimate by about 25 million bushels, had dropped the feed usage number or the residual usage number, which includes feed, by about 180 million bushels, and ending stocks for the last marketing year about 1.532, I believe, billion bushels, and that was up about, again, 150 million bushels from what it was before. So you bring all that together, especially the new crop. The new crop beginning stocks figure up to 1.5 billion, and it put us in the mode of looking at ending stocks sharply over 2 billion bushels. We were already in September anticipating that. Now we're at 2.223 billion bushels. If we have any rationing of usage at all, then you're moving instead of 2.2, 2.3, 2.4, and as far as anybody looking for a seller's market in the corn, I think we're on the other side of that fence. It's a buyer's market. We're well over 2 billion bushels with regard to the anticipated production we have running through the supply-demand balance sheet, and you just have what you have. For soybeans, actually the changes in the supply-demand balance sheet, by the time you look at what small changes came out of 2024 and bring those forward, we actually we're at 300 million bushels of ending stocks. Now, by my own figures, if the usage doesn't change, we're down below 290. The trade was expecting about again about 299 million bushels, about unchanged. So that's where I would slightly differ from the trade in terms of where things could go. I have looked at the outcomes of having yields different than the USDA's current high numbers, and when you look at the corn market and see what that balance sheet would look like, corn supply demand balance sheet with not this record high figure that we've got plugged in of 186.7 bushels an acre, but if you're only down to 184, and I'd say there's about a 40% chance we'll actually hit the 186, 187 bushels an acre figure, and more like 184, 185 thereabouts. So 60% chance that we're lower than that. and you end up dropping the ending stocks figure from 2.3 billion down to 2.1, 2.2. The corn price moves up marginally in a little bit tighter situation, up about look at 22 to 30 some cents higher. And so that if we have lower yields, all else being held equal, you'd have some impact on the corn market to the positive side. Even on beans, again, we're projecting 53.5 bushels per acre, record high, and with that, at least by my calculations, about 286 million bushels. If you end up and have 52 bushels an acre, which is still a sharply higher, a pretty high yield, and run that through the numbers instead of you tighten up ending stocks by about 50 million bushels instead of $10 a bushel. You're dropping stocks to use from 6.6 as a percent down to 5.5, and about somewhere around 11 and a quarter prices per bushel U.S. average price. So right now, in the midst of harvest, uh, pressures. It's hard to conceive of anything positive right now in these grain markets. But there's still a lot of uncertainty that's out there to be dealt with on the supply demand side, and so I guess our best job now is to go get the crop out of the field, and hopefully it's lots of bushels, and then see around the country where these larger production numbers come in at. It's anticipated they might be a bit high yet, probably move lower, and then shift our attention from well now we'll be focusing on supplies all the way through November, and really having the potential for a lot of volatility at that time in the markets, and we finally get these USDA numbers in, especially if the production yields are a little bit short, and then see what's happened, what'll happen in prices with regard. And I think that if we do start to move, if we have some surprise to market, start to move higher, 10, 20, 30 cents because of any changes there, I think that'll be met with probably very aggressive selling, as people will have languished through a pretty low set of corn and soybean prices through until that time, and any strength probably be met with very aggressive selling. And what's left over after that, in terms of any remaining supplies, we'll look hard at the storage function, at storage game, some might say, and just see where we might be at. I have, Shelby, heard a good amount of discussion from people of perhaps moving grain, corn, soybeans, sorghum, then re-ownership in some way on in the futures market, or in particularly buying call options. So I think all that will be in heavy discussion until that time. One hope that's out there for soybeans and for sorghum is that again, the U.S. and China still involved in negotiations. China's been away from these markets. They come in and start buying tangible, healthy amounts of either of those crops. Probably going to end up and lead us to some higher prices and some selling opportunities. But we'll see.
Daniel, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back.